Today on the CEO Barbecue, we're looking for gold and well, maybe a little bit of copper too in Canada's Saskatchewan, together with Trident Resources. For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record, because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Trident's current focus is mostly in gold, though, and specifically the Contact Lake Gold Project, which is a past-producing mine. But again, they also carry a little bit of optionality in copper through Knife Lake, which is a historic resource, though I doubt we'll talk much about it, but we might touch upon it later on. In addition to that, there is an updated MRE from November of last year. That was kind of the big thing for last year. That MRE was done on 4 of the Larange belt deposits, and it came up with about 2 million ounces of gold across indicated and inferred, with about a 45-55 split, respectively, all of which constrained by open pit assumptions. I guess it is across 4 pits, and also the assumption of a $2,600 gold for the economic inputs. But that doesn't include the historic nor the current drill results at Contact Lake, where recent drilling showed intervals as high as 7 grams per ton over more than 40 meters of apparent width, starting at about 120 meters vertical depth. Contact Lake is a historic, again, it's a chemical mine that closed after failing to meet expectations, but it did produce almost 200,000 ounces at about 6 grams per ton. And after Chemical left, they also left about 50,000 ounces of unmined gold in what is today considered a historic resource. Is there more of it, and will the gold be continuous enough so that a decent resource could be built on it, though, is going to be part of the questioning later on. Trident as a company hasn't been around for long, though. It came into existence through the merger of 3 companies in the second half of 2024, combining Eros, Mass, and Rock Ridge Resources, a couple of months after which the company did a 10-for-1 rollback and changed the name to what it is today, which, 3 companies, so Trident, well, never mind, you probably get it. But so the company's own pitch now says that this is now the best way to tackle what they believe is an emerging gold camp, which, of course, I'll be putting to the test later on. Trident is listed as ROCK, so that's ROCK on the TSX-V, where the average 3-month volume is about 177,000 shares. The stock's 52-week high is 48 cents, and its 52-week low is 4 cents. With a market cap of 67.5 million Canadian dollars and just over 32.5 million shares outstanding post-rollback, that is. Today, this is a $2.70 stock with a 50 and a 200-day moving average at respectively 178 and 96 cents, which means the stock is now trading above both of them. Moving on to the share structure, insiders here, they own about 20%, but how much of it was actually bought and paid for is also something I'll be asking later on. On top of the outstanding 32.6 million shares, I'm seeing 6.2 million warrants and 2.4 million options, equating to 41.2 million fully diluted shares. In total, that could result in an increase of about 26% in shares outstanding if all those dilutive securities get exercised, and that will then result in about a 21% ownership dilution if, and that's always a big if, but if all dilutive securities get exercised. And of course, none of this accounts for potential dilution down the road, which is not unlikely given that this is a pre-revenue company that operates in what is a very capital-intensive industry. Talking about money, the last financial statement is dated September 30, and it shows me about $5 million in current assets, mostly in the form of cash at the time, so $4.7 million in cash. But it also showed close to $10 million of marketable securities, and that is mostly in the form of Skeena resource shares. I don't see any long-term debt, but I do see about $2.5 million in current liabilities, mostly in the form of an income tax, although that is on pause for the moment, if I could call it that. How much cash do they have now, and what are the plans for the equity they hold in Skeena is, of course, going to be part of the conversation later on as well. But for this to actually become a conversation, I'm going to have to shut up already. And John, I'll give you the word here. But first of all, thank you for sitting down with me today.
Yeah, it's my pleasure. That was a great overview. Thank you very much for having us today.
Pleasure's mine, and I am looking forward to going over the basics here. But since this is your first time on the barbecue, I've got to ask, how do you like your steak?
Yeah, so I like my steak medium rare.
Medium rare, solid, nothing to pick on. I always hope someone's going to give me something more exciting like rare or even well, I guess if they tell me well done, I'll just hang up. But I can live with medium rare. No, jokes aside though, we'll do a deeper dive into some of the details around Trident later on. But before we even begin here, it's a bit of an unusual story, I suppose, at first glance. It's a combination of three companies, big rollback, chasing a whole camp, but so far isolated high grade hits. We'll talk about continuity and whatnot, but also a sizable equity portfolio, $10 million. So what are you really trying to build here? What's the goal? What's the plan?
Yeah, so the goal longer term is to, as you mentioned, build out a new mining camp here in Canada. The real focus for Canadian developers, for gold developers in this country, is focused on both the coasts. So the East Coast in Ontario and Quebec, the Abitibi, Ring of Fire. Clearly, there's been hundreds of millions of ounces of gold produced from that part of the country, and also a focus out on the West Coast, the BC complex, the Golden Triangle. There's really been limited focus in the interior of the country, predominantly in Saskatchewan, for gold exploration. The real reasons for that is Saskatchewan has really been the focus of the potash industry and the uranium industry, never really on gold. Orogenic gold deposits are quite common in this part of the continent. You can look at the Homestake mine all the way down in the Dakotas, which produced for 100 years. 40 million ounces of gold was produced from that mine. And the rocks are quite similar as you move through the interior. So there is the opportunity to really advance a new mining camp in this part of the country, specifically the Laurentian Gold Belt. I'll identify that as LGB as we go through the discussion here today. Really, what's very interesting to us and our technical team, and was the vision of the founder of Mass Gold, which was one of the merged entities, a fellow by the name of Ron Nedolitsky. Nedolitsky is a very famous Canadian geologist. He is very well known for discoveries like Eskay Creek, which is now Skeena Resources, which is a common thread we're going to talk about. Nedolitsky came to Saskatchewan many decades ago with the view that there were three specific geological domains that intersected at a point of contact, hence the name Contact Lake. And it is the view and the belief of this very famous, very successful geologist that point of contact is where many multi-million ounces of orogenic rock deposits might exist. The ultimate goal of this company is to advance its five deposits, including Contact Lake, but ultimately growing this into a much larger Canadian gold mining camp. So that is the longer term focus. How we get there is going to be a step ladder. The best companies are not built to $1 billion in market cap overnight. It takes a great deal of time, and we're going to exploit and explore the deposits that we have in our company, and work towards that much larger vision that I just described.
Mm-hmm. Loads to touch upon there, and again, we'll pull the details later on. But since this is your first time on a barbecue, we're not going to be talking about steak anymore, unfortunately. But we will be, we'll have to go through the smell test first, which intends to understand more about what the incentives and the track record of management are. Starting off with yourself and your track record, who are you? And have you made more money for shareholders than what you've spent during your career so far?
Yeah, so that's a great question. I'm a bit of a unique executive for a junior exploration company, but I bring a skill set that I think is not very well utilized in the industry. So I started off my career, or I call it the front nine, as an equity analyst, a sell side analyst for the first few years. I covered metals and mining, technology, diversified industries. Basically, I was a jack of all trades, but with a specific focus on metals and mining. And that was back in the early 2000s. So I came through the first boom, 2003 through 2007. I was able to make a bunch of very good calls from the sell side. I wrote some very significant research reports, which were very well read and well used by the buy side at the time. And I was able to leverage that research and that track record into a job on the buy side, where I then went to work for a very good strategic alternative hedge fund for the next 10 years. Award-winning performance, so making money for unit holders, not shareholders at the time, but really learning the capital markets inside and out and managing money at a very professional level. When I left that fund, the fund had a track record of 16% over 16 years. So very substantial, top decile performance. The fund actually won several awards in the latter part of my tenure as the portfolio manager. From there, I was recruited and hired by Sprott Asset Management, which has now become 9 There's a very famous Canadian investor. His name is Eric Sprott. I grew up, following Eric's picks, reading his research, really, looking to him as, an institutional portfolio manager with an unbelievable track record, a very good knack for picking undervalued securities across all sectors. Quite frankly, eventually he morphed into a resource portfolio manager. Eric, I believe, was moving on from day-to-day portfolio management. He was managing the Canadian Equity Fund, the Sprott Canadian Equity Fund at the time, and I was hired to go in and run that fund, which I did for the next 5 years. So during my tenure at Sprott Asset Management, again now 9 I had the opportunity to work with some of the best resource investors, the best resource analysts on the planet, in my opinion, and I was able to learn access to tremendous amounts of information and knowledge. When my time was done at Sprott Asset Management, I moved on. I took some time off. I had a young family at the time. I wanted to really figure out where my kids went to school, the names of their teachers, where their classrooms were. And so I thought it was going to be about 12 months to do that. But I got anxious and bored and couldn't keep away. And in 6 months, I was off to work inside one of the largest family offices in the country, again, as an institutional portfolio manager, stewarding capital for a large, very well-known Canadian family. I did that for the next couple of years into the pandemic. And then really decided that managing money for billionaires was not the way I wanted to spend the back nine of my career, the second half, so to speak. And so I left and started to become a builder. During the pandemic, I took a very bearish view on the US dollar. And as a result, a very bullish view on first base metals and then secondarily precious metals. Just backtracking for a second and just to, create some credibility. I had not owned any base or precious metals in any of the portfolios that I was managing for about a decade. Okay, and that was the right call at the time, but became very bullish as we were emerging from the pandemic. At that point in time, I met a gentleman. His name was Jordan Tremble. Jordan Tremble is the president and the CEO of a company called Sky Harbor and was the president of a small company called ROCK.V at that time. Jordan needed some help. I first came on to ROCK.V as a strategic advisor and then ultimately became CEO. And Jordan and I have been we're building ROCK.V up until the point in time when it was merged, as you mentioned earlier, with two other companies, Mass Gold and Arrows. And we'll get to that in a second. ROCK.V, at the time that I joined as its CEO, had a very nice foundational asset, which still remains in the merged Trident entity. It was called Knife Lake. It was a copper asset. That was originally what attracted me to the company. Knife Lake is a 200 million pound deposit in northeastern Saskatchewan, so phenomenal jurisdiction. The deposit was at surface, just slightly less than 1% copper. It was a very nice foundational asset for me to sink my teeth into. And then start to fill in the mosaic or the blank canvas. And it was mine and Jordan's ultimate thesis was we would backfill ROCK.V with a bunch of very good assets from some other companies, and we tried to consolidate for a number of years during a very bad period in the mining sector. It wasn't until 2003 that Jordan and I met with Ron Nedolitsky and his team at Massgold. We started down the discussion about a merger with Mass at first, and then it morphed into a discussion between Rockridge, Massgold, and Eros Resources. 15 months later, 1,000-page circular, a very large legal bill, and a ton of work, we created Trident. And that's really the evolution of how I went from the sell side to the buy side as an institutional manager, and then my transition really into the natural resources industry as an issuer. So what I bring to the table is a very strong competency when it comes to financing, capital markets, structure, M&A, investor relations. And given my time managing money institutionally here in Canada, learning about the natural resource sector, you must know about the natural resource sector if you're a steward of capital here. It allows me to bring a knowledge base on equities focused on mines, metals, oil and gas, et cetera. So that's my background. That's what I bring to the table. And I hope that is a good sign of credibility to your investors and your readers.
What'd you do for 10 years, though, if it wasn't resources?
Yeah, so it was a number of things. The fund was multi-strat, so we did things like convertible arbitrage, merger arbitrage, stock picking. So identifying large themes, drilling down, and picking stocks from the bottom up. So very diversified across sector, market cap, geography. It was a jack of all trades type of fund. So and very successful.
So you got tired of the made up economy, and then you thought, I'll do something real.
So the doomsdayers, the gold bugs, that theory, I'm not as profound as some of them. However, I have taken a very bearish view on the U.S. dollar, and again, become very bullish as a hedge in precious metals and base metals. So,
yeah. Well, you have been right since, essentially. And I think everybody who's taken a bearish view on pretty much any currency has been right. So that's a good point. Do you currently do anything else? Do you hold any other positions, executive or board, or anything else that takes up any of your time?
Yeah, so I'm a founder of a digital assets fund company. It was called Liquid Meta. It was a crypto business that was started by a bunch of very sophisticated crypto investors, and it played on the same trends and themes as the gold thesis. That was incorporated back in 2021. It raised a bunch of capital heading into 22. The management team had some difficulties navigating through the collapse of FTX, and that business has since been idled. It's a cashed up shell. So I do sit on the board of that business. And I'm also the founder of some other private natural resources companies, and so on the board of some private companies. But my main focus today is Trident.
So you don't get bored, essentially. But how do you split your time, though? How much of your time do you think goes toward Trident versus all the other ventures?
Yeah, so I work 7 days a week. I don't know anything but, and I would tell you that at least 100% of my time is spent on Trident these days.
At least 100%. Maybe in your sleep as well. So it might be more than 100%.
Yeah.
Moving on to skin in the game, John. The management and insiders, as I mentioned, they're noted about 20%. How much of that is you personally, and how's the rest split up?
Yeah, so Nedolitsky, the geologist, the founder of Massgold, he's our largest shareholder. He's around 12%. Jordan Tremble and myself are probably 4% each after that, and so that's the vast majority of the 20.
Okay. Well, in the overview, I promised that I have to ask about acquisition cost. What's your average cost? Is that bought and paid for? Any cheap paper out there? Talk to me about that.
Yeah, so I'm not a founder of Rockridge, which is how I entered into the transaction. Every share of Trident and Rock, the preceding company, every share I've acquired with my own hard dollars. I don't own any cheap shares. I don't own any founder shares. My average cost base is around $1.40.
Okay, so you didn't get any free shares when putting the deal together and like
No.
Oh, okay. Okay.
There was a financing, a $2 million financing done at 50 cents. I was one of the largest check writers on that round. So I made a purchase of those shares. That's really how I've acquired the biggest position in the company.
And then there was that rollback after that,
Yeah.
10 to 1. How much of that paper do you estimate has been worked through, right? Because I don't imagine that created a bunch of happy shareholders, probably the
No.
opposite. So, yeah, how much of that do you think has been worked through at this point?
Yeah, that's a great question. It's hard for me to tally that number. I believe just based on the volumes over the last year, I think we've worked through a lot of those shares of the unhappy shareholders that got rolled back 10 for 1. I'm one of them, by the way. My shares were rolled back as well. Um, the three companies were effectively zombie companies at the time. They were small. They weren't getting much attention. Rockridge, as I've told you earlier in the conversation, it had a nice copper asset. I don't believe it was a company, a foundational asset to build a company off of. Mass Gold had a tremendous amount of asset value. It had the 4 deposits. It was 1.2 million ounces of gold, upgraded recently, as you mentioned in your monologue at the front, up to 2 million ounces, and it included Contact Lake. Mass Gold did not have the capital nor the capabilities at the time to go and really exploit and explore those resources and grow the business. They needed some help, hence the reason why they started to engage with Rockridge and the Rockridge management team.
Hmm.
Eros, on the other hand, was the third leg of the stool, which we haven't talked much about. Eros Resources had a balance sheet, and the balance sheet was mostly in some junior illiquid securities. However, they did have a very large historical legacy position in a company called Skeena Resources. And Skeena Resources at the time of the three-way merger was around $5 or $6 per share.
Mm-hmm.
Today it's around $35 per share. The stock has done incredibly well. Ron Nedolitsky is the founder of SK Creek. So there is some good knowledge behind that position. And so, so Eros brought the cash, Mass Gold brought the asset value, and Rockridge brought the mine and management.
Yeah. I have been wondering what's going to happen to those shares because they're heavily in the money, and we'll definitely talk about that later on. But just reminding me, talking of insiders, do you or any of the other insiders personally own a royalty on any of the projects you have?
No.
That's the right answer, and short and sweet. That's how I expected. And I think that about does it for the smell test. I want to move on and talk specifically about the business strategy for you as well. But it might be worth going back and like way back first, because again, historic mines, a lot of things happening there. A lot of people try to work on it, put it together and everything. Cameco operated one of it. And a government review said that it stopped because, and I'm quoting here, it failed to meet expectations due to lower than anticipated gold grade. So talk to me about the history there, maybe of the whole region, and specifically zooming in on what you're focusing on right now. But what happened with the project? Why do you believe this time it's different?
Yeah, so let's just go back to Contact Lake for a second. I don't believe that the mine was closed due to lack of expectations on gold grade. I don't know where that quote came from. That would be interesting for you to share the source of that with me, because I haven't seen that. It's my understanding that Cameco had a very active gold exploration business in Saskatchewan, dating back to the 1980s, before it was even named Cameco. They made a number of discoveries. They drilled, probably hundreds of thousands of meters, across the province over that period of time. They built the mine Contact Lake in 1992 for $65 million at the time. The mine operated between 94 and 98. As you mentioned earlier in your comments from the beginning, they did produce just under 200,000 ounces of gold at a 6.13 gram per ton head grade. The mine was closed, by my understanding, and through talking in great depths with former people that worked at Contact Lake, for two reasons. Number one, and most importantly, Contact Lake was producing gold at a time where gold prices were sub $300. Sentiment was quite poor. We had just come through the Bre-X scandal here in North America. Gold prices were depressed, sentiment was low. There wasn't really much going on in the sector. Cameco at that point in time, they shut all of their gold operations, not just Contact Lake. Most of those gold assets were spun out into a company called Centerra. Contact Lake was shut, reclamated, cleaned up, and it went back to the government. So number one, they shut it because of low gold prices and poor sentiment, by my understanding. Number two was Cameco was really focused on advancing their uranium operations at the time. The return on capital was better spent on uranium. I think they made the wise decision. McArthur Lake, I believe at the time, was producing one of the best performing uranium assets globally. And Cigar Lake was being advanced and developed. It started into production, I believe, in 2006 or seven. So that was a very big deal for the company at the time. The gold was, as I like to describe it to other investors, the gold group were like the X-Files. They were the group in the base, hidden in the basement. They weren't really, a profound impact on the company. So shut, close, Cameco went on to uranium. Gold prices were really lousy. That's really the reason why the assets were shut down.
Yeah. So I was wondering though, what about geologically? And I understand you're not a geo yourself, and neither am I. But it maybe it'd be good to get some of your geos on at a later date for a full on, like geo deep dive interview, if you will. But maybe in your understanding, was it anything else in the geological model that broke, with like geometry or continuity or coarse gold or something else?
So we've spoken to the former mine manager and the former head geologist that operated at Contact Lake. It is their belief that the asset was shut down very prematurely. There was gold in all directions, both at depth and along strike, mostly to the northeast. And the asset was closed again because of low gold prices. If you've read some of the details about the former mine and you've heard some of my interviews, Cameco mined in the Baco shear zone down to 340 meters. Again, I'm not a geologist, so bear with my descriptions. They mined down to the 340-meter level. The only other two operating gold assets in the province of Saskatchewan, which we often relate Contact Lake to, is the CB Santoy mines. Mm-hmm. CB was mined out a couple of years ago. They mined down to 1.3 kilometers. The Santoy mine is the only current active gold mining operation in the province today. And that mine operates down to 750 to 800 meters. Again, Contact Lake only mined to 340. It pinches and swells much like the CB and Santoy mines. It has very similar grades. CB Santoy, that mining head grades were between 7 and 8 gram. Contact Lake was just over 6 gram. And we believe that that the mineralization at Contact Lake, it extends at depth, it extends along strike to the east towards Contact Lake, and it looks and it feels a lot like the CB and Santoy deposit. Mm-hmm. Not only does it look and feel like that to us, but it was just verified even further that there are many similarities. We just hired a former underground geologist at CB Santoy, and he's joined us today. His name is Paul Kramer. He worked for SSR, which is CB Santoy, for the last decade. He sees a lot of similarities in the rocks and the geology between the two assets. So we're very excited to continue our exploration program.
Yeah.
Just to elaborate on that, we have only drilled 7,000 meters. That was the start, which was completed last fall. And we're now currently planning a 10,000 meter program, which we'll be in a better position to discuss in the coming weeks.
Yeah. Also, just FYI, and I can send you this. It is an old paper that I ended up stumbling on. It's called the Provincial Geologist Journal, specifically volume 15 from 1997. I think I cannot read my notes, but it's 1997, I believe. And it was talking about another Saskatchewan gold mine, I believe was the Comis or Comi gold mine that had shut down for great challenges. And it notes that at the time, Contact Lake was actually still operating, and it notes in there that it might shut down due to similar reasons. And they predicted it would close in 1998. When did it close?
1998 is when it actually closed.
Okay, yeah. Yeah, so they predicted. I'll send you that. It's actually
Yeah.
that there's not much more in there for you, but besides that, it was like one excerpt, and I was
Yeah.
wondering what that is about. But again, it'd be good to do another kind of full on podcast with your geos and talk about maybe
Sure.
some of the intricacies. What is the
Yeah.
target size for you here, though? Because and look, John, really what I'm looking for here is, can this be big enough to matter? Can this type of system host something
Mhm.
potentially mineable and coherent enough so that it is mineable? And especially considering, again, location
Yeah.
in northern in northern Saskatchewan and the logistics that come with that and all of it.
Right. So if you look at the mineral deposits on the Saskatchewan.ca website, and you go and you pull up some information on Contact Lake, you'll see there that the resource at the mine site at the time that production started was 340,000 ounces. I believe at a head grade of somewhere between 8 and 10 gram. Okay, not the mining grade, but the resource grade. Now they mined 200,000 ounces of that, so they left behind, call it another 200 and 200,000 ounces, just about. Outside of the historical mine site, there was another 350,000 ounces of resource that was left behind. So that's about a 500,000 ounces of gold in resource that's known based on Cameco's numbers, okay, historical numbers from the 1990s. And that was calculated at a gold price that was probably sub $300. So you can do some math and figure out kind of in today's dollar terms what those ounces might look like. So I think that's your starting point. Okay. Now, don't forget that I think that this mine was capital deprived throughout its production timeline in the 1990s. It just really wasn't given enough capital to go and discover much more gold at the time. Um, the CB mine, it produced 2 million ounces of gold over its history. This project, 200,000. So 10x from the mine, just 50 kilometers away with very similar rocks, very similar, geology. So when you ask me what the target is here, I think that, your baseline is 500,000 ounces of historical resource. Don't forget our resources on our books exclude Contact Lake. Okay. So the 2 million has nothing to do with contact. And what I'm suggesting to you here is all based on historical facts presented by Cameco. Nothing has been published by Trident as it pertains to resource on Contact Lake. That's very important to make that comment. So 500,000, I think, is baseline, but I think a 2 million ounce resource based on the comparables, based on the geology, and based on the mineralization at depth and along strike. I think that is ultimately the target, or the near term target over the next 12 to 24 months for the company.
I like that it's a near term target as well, and that you're putting it that way. And I essentially have three follow up questions for that, and they're about essentially time, money, and risks. And I want to talk about all three of those, maybe a little bit more in depth. First one, though, time, which I understand is not as straightforward to talk about, but to your best guessing abilities, how much time could it take for you to bring this to the next stage? So not the final stage, 12 to 24 months, but which is, I suppose, what, an updated MRE or something else in between. What is it, and when do you think it's going to happen?
Yeah, so it might be a little bit preliminary for me to give any type of guidance on an MRE for Contact Lake.
Okay.
We are still in the very early days of our exploration initiatives at that project. We did a 7,000 meter program, which had 100% success rate on the first three holes. The market is still waiting on the next 16, so let's not talk about those for now. I don't really want to go there until we release those assay results. However, we have said publicly that the plan for winter is a minimum of 10,000 meters and up to potentially 20,000 meters at Contact Lake predominantly, and nearby the Preview North and the Preview South deposits. Just to tie that all together, Preview North and Preview South is about 2.5 kilometers from Contact Lake. Geologically speaking, it is believed that Contact and the Preview deposits are connected geologically. It is our ambition to make those connections through advanced exploration over the next year or two. And those preview deposits are just under 1 million ounces of gold at just about a gram per ton. So that could add to a very economic mining complex as you move forward. I think I'm rambling on here. I'm straying away from the question. Maybe you can just repeat that so I can get back on track here.
Well,
Oh, time.
yes.
Yeah, let me get back to time. So I think that 10 to 20,000 meters of drilling this winter will, put us in a very good position to better understand the mineralization and the connectivity at Contact Lake and Preview. And that'll probably take us through the summer. In the fall, if we can get back to another 10 to 20,000 meter program, that'll be up to 50,000 meters of drilling at Contact Lake. That'll give us probably a very good understanding of the geology, the mineralization, the ore body, and where we're going to go from there. So I think by the end of 2026, we'll be in a very good position to, let investors, let the market know, size, grade, and direction at Contact Lake. Does that answer the question?
Yeah. And I understand it's tough, and I understand it's forward looking, and it probably takes more conversations to get to it. What I'm mostly looking for, I suppose, when I'm asking about that next step is more of a catalyst. Like if I bought today, what could I hope would move the price either up and down? What is the bet that I'm taking on that next catalyst? What is that catalyst?
So there are two things at Contact, because that's been the real focus here. And I think that you saw the starting of the big catalyst in the release of the first 3 holes. So we all know the Baco Shear Zone is where Cameco focused their mining operations. That's where the grades were coming from. Hole number 3, which you quoted at the beginning of this conversation, it was 7 gram over 43.25 meter. That hit was below the Baco Shear Zone. It was about 30 to 40 meters away. So it was another known zone of mineralization that was not discovered by Cameco. And I'm not going to say it was a new discovery, but it was potentially a new zone of mineralization. I think that that's the first big catalyst, is if we continue to show the market that Cameco left behind a bunch of other known zones of mineralization outside of that Baco Shear Zone, the known zones of mineralization. That's number one. Mm-hmm. Number 2 is a couple of the holes, predominantly 14, 15 through 19 on the recent drill program. Remember, there were 19 holes. So 14 through 19, they tested zones below the mining areas at Contact Lake, so below 350 meters. That is really, in my opinion, where the blue sky exists for the company and the next real catalyst for the stock. Mm-hmm. If there are good intercepts below 350 meters, and you are starting to prove that the mineralization extends at depth and looks a lot like its neighboring mining asset, CB Santoy, I think investors will start to get very excited about the opportunity to be adding, hundreds of thousands, if not millions of ounces, hopefully, of gold in the future, the blue sky, right? So again, finding new zones of mineralization in the known mining areas, right, below and near the Baco Shear Zone, but really focusing in on the deeper holes, 400 meters, 500 meters, maybe 600 in the future. And that's where, you're going to get your real uptake.
Yeah. Wait, but you're not drilling right now, are you?
So drilling was completed in the fall.
Yeah.
And we're just getting ready to announce a winter program and get active here later this month.
Yeah. Everything's frozen up there, I assume. Lake and mud and everything else is frozen up right now.
So it's all frozen. In order to put a rig on Contact Lake, because you obviously can't drill from the lake during the summer and the fall months, you need about 20 inches of ice. We're a little bit more than halfway there. We believe by the end of January, we'll be able to put a rig or 2 onto Contact Lake. The reason why it's very important to be drilling from the lake is Cameco identified a mining area called the BK3 zone, which is a big part of that resource that you and I both quoted on this conversation. BK3 is mostly accessible or most easily accessible from the lake. And so it is going to be our, part of our work program over the winter to be testing that zone, the past mining stope, the unmined stope at BK3 and below.
When do you think you're going to have some? Because you're still waiting on assays from the previous program.
Yeah.
So when are you going to have those out? And then when are you going to have the assays from this program that you're about to start?
Yeah, so we're hopeful to have the balance of the fall program out over the next several weeks. They're just going through some final analysis and should be put out to the market. So that should be a nice catalyst for investors. And then if we're drilling in January, we believe that we'll probably wound up by mid to late March, hopefully, with results coming probably early summer.
Right. Okay, that's clear. I do have a question. Excuse me, John, about the lake, and we'll get to it once we're talking about some of the potential risks. But the second thing I said that I want to talk about was money. How much of it do you have right now, and how much more do you expect having to need to complete the plan, if any? Talk to me about that.
Yeah, so there's about $12.5 million of cash and securities, liquid securities on the balance sheet right now,
Yeah.
mostly in the form of Skeena resources, as you mentioned.
But cash itself is like what, 2 million?
Cash is about four.
Oh, okay, 4.
Cash is about four.
Right.
And then Skeena will be the vast majority of the difference.
Yeah.
Between the
Okay.
4 and the 12.5. We have some warrants from the 50-cent rounds, which are being exercised as we speak. That'll bring in another $3.5 million of cash. So call it $15.5 to $16 million of liquidity. The 10,000 meter program will likely cost around 5 million. If we double that to 20, that's 10. So we are well covered with hard dollars on the balance sheet to cover the winter program.
Mm-hmm.
I think as we move through the balance of the year, we have enough cash and liquidity to facilitate our growth through the early summer, and then we'll reevaluate where we would like to go from there.
Well, where would you like to go from there is interesting to me as well, because essentially you're holding two types of securities, right? You have your own shares that you could issue new ones, but essentially you'd be selling your own shares, or you could sell the Skeena shares. Which ones would you be more inclined to sell?
So that's a great question. We're a $65 million market cap. We have 2 million ounces of gold on our balance sheet without one hole of exploration on any of those 4 deposits. All 4 deposits are open in all directions. So there's a lot of growth on the 2. When you back out our cash today, you're looking at an enterprise value of around 50 million bucks. We're trading around $25 per ounce on the grounds, which is a significant discount to many of our Canadian gold exploration peers, which trade at an average of $60 per ounce, but as high as $140 per ounce. I think it would be fairly unwise of any company to sell its shares or issue its shares at such a deep discount to market valuations. And getting back to part of my expertise is structure, financing, cap structure, those types of things. I would not be very inclined to want to sell my shares at $2.10, given where we are in the market and all the catalysts coming down the pipe. So that leads me to your second part of the question as to what would you like to do with your Skeena shares? I want to make it very clear to your audience that we are not speculating on shares of Skeena. We're not investors in Skeena. We're not an institutional portfolio manager. We have inherited those shares fortuitously through the work of Nedolitsky and his prior team. And I look at the shares of Skeena as a source of capital more than anything. And so when you ask me, would I rather sell Trident shares at $2.10 or $25 per ounce on the grounds at a deep discount to its market comparables, or sell Skeena shares? Well, I think I've answered the question.
Yeah. Yeah, that's fair. And that's something that I would agree with. And I think it is the right answer. How much are you targeting for G&A?
So that's a moving target because we are growing. We're growing quite quickly. G&A right now is around 100K a month.
Oh, well, I looked at the at the current financials and it was like $3.3 million for the 9 months that ended on September. At the end of September, that's like 350 or 370 a month. I know you're doing more marketing now, so what's yeah, where was that 100? Because you said 100, and I'm seeing much more than that. Where's that coming from?
Yeah, so steady state when I look at G&A, I back out marketing initiatives because
Okay.
those are more one-off. I'm talking about just the operating G&A to run the business.
Right.
It is probably around 100K, and then the marketing is on top of that.
Right. Well, that really, when I'm asking about G&A, and I might not be putting it correctly here, what I'm asking about is non-exploration spend. So outside of the money that you need to complete that drill program, what is the rest going to cost you? So, albeit marketing and travel and really everything else, lawyers, bankers, everything.
Yeah, we're probably targeting between on a normalized rate, probably between $1 and $2 million for the year.
Okay. Well, but again, that 9 month period is already at 3.3.
Yeah, so you know what? I'd have to go back and look at the numbers. I'm not looking at the financial statements like you are at this
Okay.
point in time. So why don't I come back to you on that?
Sure. Talk to me maybe a little bit more about marketing because you said it's kind of like a one-off where it depends on the market. I see you've ramped it up aggressively, if I could say that. Why spend so much on marketing? What are you hoping to get out of it?
Yeah, so Trident's a brand new story. It's roughly 1 year old company. We did virtually no marketing until we had completed the MRE report, until we had completed and started to release news from the contact lake exploration. So the marketing really started to ramp up in the fall of last year. We just think it's very important for investors to, you know, to hear the story, to get it out as far and as wide as possible, and just to backfill the great news flow that's coming down the pipe. So that's why we've decided to ramp up the marketing initiatives.
What do you want to do specifically for marketing? Is it a combination of digital and in person, or do you want to go heavier on the one versus the other?
Yeah, so I don't think that there's a magic formula for it. Where we're going to try a bunch of things. I think the biggest thing for the company is to get the story, get it out to as many investors as far and as wide as possible. Like that's the priority. So, I've been on the road since September. I've been at various conferences. I've been meeting institutional investors all across North America. I've spent a lot of time talking to retail, high net worth family office as well. I think I've met over 50 institutional investors, probably over 100 retail investors. And then we're backfilling a lot of those initiatives by executive management with some third party with marketing firms.
Mm-hmm. Yeah, good. Fine, and that's something that I suppose works different in different markets, and something that you can turn on and off much more easily if it was needed. Warrants, maybe you can talk to me about that. What about the warrants? What are the terms that you have on the warrants right now? Is there an acceleration clause to it, or do you expect any of that money to come in? Talk to me about that.
Yeah, so we have 75-cent warrants that were part of the 50-cent round back in April of this year. There is an accelerator. The accelerator is strikes if the shares trade above $1 for 10 days. So we could, in fact, enact that accelerator today. We've chosen not to. The vast majority of the participants in that round are the management team, the board members, and very good friends and family members of the insiders that supported us early days at Trident. And so we've gone out to the network and have requested that people exercise those warrants, as opposed to going out and accelerating them in a press release. As an former institutional investor, I never really liked when a company called me up and told me they were accelerating my warrants, especially when there was 3 to 4 years on a 5-year warrant left on them. But all of the friendly warrant holders are now starting to exercise. We've actually started to churn through quite a lot of those.
Yeah. And this entire conversation since we started talking, since I said I want to talk about money, John, has really been about that. How do you explore efficiently without kind of shooting yourself in the foot? Having to do another, big raise with a lot of new warrants and create more overhang and so on and so forth. So that's where I'm coming from with the warrant question as well. Which also reminds me of, are there other ways for you to raise capital? Would you consider a JV or bringing on a strategic partner at the equity level, or like is project level even on the table? Talk to me about that.
Yeah, so I think all things are on the table right now. I think so. What's probably not on the table, and I say probably not because you never know how markets are going to behave from day to day. But we would not like to issue new equity here at these prices. That is a stated goal of the company, is to get our news flow out, get the catalysts out, and get the valuation discrepancy between the peer group and Trident starting to narrow. So we would not like to be issuing equity here. Strategic capital is always something that I think junior exploration companies should be exploring at both the project level and the equity level. If there was interest, depending on who the partner is and the strategic advantages that they could bring to the table, I think that would be something that we would consider. The beauty about our cap structure right now, Antonio, is that we have 32 million shares outstanding. It is very tight. 20% of those shares are really held by insiders. And if the stock were to perform the way that we believe that it is going to perform at a normalized valuation metric, then selling shares at a much higher price, even relative to the last price of shares that were issued, I think would be a very good way to provide growth capital to the business. Whether there's a warrant or a dilutive security attached to that those new prospective shares, then that's to be determined. We'll see what the market appetite is like there. The other way to really fund our growth is through flow through. Flow through is always a very attractive way for the company to grow its business. We did a flow through round with two strategic investors, very good investors, very friendly to our firm. We raised 2.25 million. It was done at 75 cents. We would look to doing a flow through round at some point in the future as well.
Saskatchewan is what, 40% premium?
Saskatchewan right now is about 1.4, correct?
Okay, that's right. Okay, critical. Oh, but because you're probably not. I'll ask you about that maybe later on, but or maybe now. Are you going to the copper projects? Because maybe you can get some of that critical metals flow through as well.
100%, that's on the table.
Okay,
and something that we'll explore for sure.
Okay, interesting. You mentioned, here's a bit of a quirky question, John, but you're reminding me of it. If I, outside of management's 20%, if I gave you 5 phone calls, how much of the stock do you think you could locate?
That's a great question. I think that the stock was widely held by many retail small shareholders. I think that is now rotating. So I have not looked at the institutional investor ownership since we really started aggressively marketing to institutions about 3-4 months ago. That's on the list of things to do in the next couple of weeks.
Mm-hmm.
I don't know. The answer is I don't know, and that's something I have to get back to you on. It would take more than 5 calls to find the balance of the 80% of the stock.
Yeah, I would assume so, and you would need that too because you want liquidity. I'm just kind of wondering, like, if management's, juniors like saying that we have tight hands, and everybody always says that, but how tight are the hands really, and how much of the stock is in those tight hands? So that's where I'm coming from with the 5 phone calls. But it seems like we're going to have a lot to talk about in a follow-up conversation anyways. Would you see yourself using some of the other projects that you have as potential funding opportunities? Because you said everything's on the table, and you do have different kind of projects, if you will, and targets that could make up for a standalone junior in and of themselves. So would you see yourself optioning out one of them, selling, doing something else that would bring in liquidity?
Thank you for reminding me. That was the other pillar I wanted to talk about in terms of funding growth. So Knife Lake is our copper project. 200 million pounds of copper, near surface, very good grades, 11 identifiable high priority targets, VMS. As you know, McIlvenna Bay, which is being built by Foran, has captured a lot of attention in the markets. They've done a phenomenal job. This is a very similar yet much smaller project. There's a lot of value. We get negative attribution in our share price for Knife Lake. The focus clearly for Trident right now is on the gold projects, the 4 deposits plus Contact Lake. it would be in our best interest to explore all potential opportunities for Knife Lake. Copper prices are also $6 pounds. There's a lot of people and analysts expecting the copper prices to perform very well over the next year or two. So, as I mentioned to you earlier, all things are on the table, including some form of monetization of Knife Lake.
Yeah. That's probably too preliminary to talk about or too forward looking. I would ask you, what would that look like? What would you be hoping for? But that's something we can table for a different time as well. I do have my own kind of third pillar that I said I want to talk about, which is the risks. After money comes risk, or maybe comes before. But I'll open it a bit broadly, maybe. But there's actually other stuff that we can talk about after that as well. But so, in your opinion, John, what's the biggest risk for the company right now, be it geological or otherwise?
So commodity price risk is always the biggest risk for these companies, right? The gold price has performed exceedingly well. It's been a dream environment for gold investors over the last 12 months. Albeit one could argue that the smaller explorers, the smaller developers haven't performed as well as some of the seniors. We still believe you'll have that trickle down effect. So after commodity price environment, geology is a risk. It's not, I don't believe, as great of a risk as you would find in some other junior exploration companies, given the work that's been done on these 5 projects, these 5 deposits in the past. Contact Lake is a real interesting opportunity. Cameco put 200 plus holes in the ground, thousands of meters. There's a lot of data for us to work from. We just think that their work was cut off short by a lousy gold price environment. So we don't think geology is a huge risk at Contact Lake, more so at some of the other projects, Preview North, Preview South, North Lake, and maybe Grey-Wacky. We think that that's a risk. Infrastructure is something that works to our advantage. We are in a very strong area with phenomenal infrastructure. All of our assets are road accessible. We have power that runs up Highway 102 alongside all of our assets up into the Athabasca Basin. There's communication towers. Like, you could stand on Contact Lake and FaceTime me from there and have a very good conversation. So communication, like, infrastructure is just phenomenal. We're a 6-hour drive from Saskatoon, 2.5 from Prince Arthur, an hour from Orange. So I don't see infrastructure as being a risk. As in other parts of our country, First Nations and First Nations rights can be a bit of a risk factor. We don't see First Nations as being a risk factor in Saskatchewan. In fact, our community relations with the Lac La Ronge Indian Band is very strong. We continue to advance that relationship. It's very important to us and our company. It was a legacy that was left behind by Ned Olitsky and his prior teams. They left a very, very good relationship with the band in the past, and it's our goal as new management to carry that on. So it's not First Nations as a risk. Capital, access to capital can be a risk. Fortunately for us, we are in a very fortunate position to have the cash and the securities available to us on the balance sheet. So I don't know if financing is a real risk. I see this as a junior exploration company with mitigated risk. That's how I look at Trident.
Given that you're dealing with multiple assets and multiple historic assets as well, how much data do you have for them? I mean, you mentioned the Cameco data is like 100% of the holes that they drilled. Is that still accessible to you? Do you have the core logs, or how much of that data do you have access to?
So we don't have access to the core, which is unfortunate. That's a bit of a disadvantage. That was a bit of a disadvantage for us because nobody has looked at these rocks in about 30 years. Having that core would have been very valuable to us and our geologists and technical teams during our drilling programs. We don't know what's happened to the core. We've asked, we've looked around for it. We have no idea where it is. The certificates for the drill logs, that is all accessible to us, except for the deeper holes that were drilled from the 340 meters and below. We don't have access to that. All surface drilling reports, certificates, assay results, we have. So there's a good amount of data that's been collected by Trident from the previous owner. As for the 4 deposits that make up the 2 million ounces, most of that work was done by either Mass Gold or some of its predecessor companies. We have access to all of that data. So the data and the data control is very substantial and significant in the company.
But and again, given that you're dealing with multiple assets and legacy assets, well, like multiple legacy disclosures and so on and so forth, do any of them carry any legacy issues? Like, I mean, you mentioned First Nations, so like community or permitting, or was there something with tailings or anything else really that you could think of?
To the best of my knowledge, all 4 deposits plus Contact Lake have no issues whatsoever.
You do have an obligation to clean up Contact Lake, or do you not?
So that's an interesting question. I'm not sure I fully understand. It was cleaned up. The mine was, fully reclamated. Cameco lived up to its provincial expectations. We do have to meet certain exploration guidelines during during our programs. We have to make sure that the water is kept clean, which we do. I'm not quite sure what else there is for us to do. It's not a mining project. It's just pure exploration. So all of our permits are in good standing. Water control isn't an issue. I don't think that there's really any problems there.
No, that's a good point. On the cleanup, I kind of assumed that there might be something. So that's where I was coming from with the legacy issue questions as well. I do see that there's a promissory note that was converted into preferred shares by Netolitsky, Ronald, that is, and that carries a dividend to it, like a 4% cumulative dividend. Is that what's that all about? Is that something you can solve or clean up? Do you see it as a big burden in the first place? And how could you solve it?
So there was that preferred amount was the amount of debt in Eros Resources. I think it was Eros Resources. So Ron made a loan to the company. It owed him the 2.3, the 2.4 million that you quoted earlier. We converted that debt into equity. So we made it into a very investor friendly, corporate friendly preferred share. Those have very good terms on it. So we can purchase that back. At some point in the future at par. It carries a 4% cumulative dividend on it. Like I said, it is a very, very friendly piece of paper for shareholders.
Mm-hmm. You did mention the community earlier on. You said there's no issues, but it is Canada, and First Nations are a huge part of every story there. So we might have to talk about them a little bit more in depth here. How many communities are you dealing with? How many First Nations? And what is the paperwork that you have in place now?
Yeah, so no formal paperwork in place with First Nations. I was up there this summer at the request of the Lac La Ronge Indian Band, which is the primary and only Indian band that we talk with. I went up and met them, met their council. We presented the story to them. We expressed our desire to work very closely with the community, to help create jobs, to make sure we're good stewards of the lands, as the previous companies were. I think our meetings, our interactions have gone very well with the bands. There was a management group called Kitsaki. Kitsaki, I think, oversees a lot of the commercial businesses of the Lac La Ronge band in Saskatchewan. They are shareholders of our company. They're very actively involved. We use their services when we can, and we'll continue to do so. We understand that the First Nations and their communities and their interests and their rights in the province are very important. They're important to the province, but more important specifically to the band themselves. And so it's, again, very important for us to maintain very strong relationships with that group.
Yeah. Do you need any additional permits or anything else to do any of the work that you have planned, or what does that look like?
Yeah, so fully permitted for exploration drilling at Contact and Preview over the next several months. Our applications from the point in time they were submitted took 60 days for us to receive acceptance of those permits, which is quite a robust time frame. So really, there's no issues. That the biggest issues are how quickly we're going to be able to grow and advance, ounces in the ground at these projects. Like I said earlier, that the real focus is, there's 2 million ounces at the non-contact lake deposits open in all directions. We'd like to, commit some capital to those projects and, get the 2 million ounces of gold at those along those 4 open pit deposits up significantly over time. And really focus in on extending and deepening our understanding and knowledge of contact lake, ultimately working towards a sizable resource there.
Yeah.
So,
well, and again, it's probably a good idea to have a follow up conversation and set aside another hour or so to talk rocks specifically. But also maybe just briefly from the geological risk perspective, one of the main things you see in the assay table in your November 12 news release is wide intercepts of up to 30 meters at times where there's like a half a gram of gold. And then it spikes up to 27 grams over much shorter intervals on different occasions, which is really where I'm going with this, John, is continuity. How much of a challenge do you think that will be, and how replicable do you think these results are?
So we're 7,000 meters into, the very first exploration work at Contact Lake in 30 years. Being able to sit in front of you and your audience and talk about continuity, I think, is a little bit preliminary at this point in time. I think let us get the results of the remaining 16 of 19 holes to the market. Let's have a follow-up conversation once we can speak to a greater sample size. I think that's going to be more valuable to you and the audience.
Right. That's fair. Fair enough. One last thing in terms of risks, the lake, I said I did want to talk about that.
Yeah.
I mean, it's Saskatchewan. Lakes are no exception. How important is that lake to just the general ecosystem and community, and how much disturbance can you really do there?
So let's go back in time to a provincial government that was not as pro-mining friendly in the 1980s and the 1990s. Cameco was able to permit, build, construct an underground mining operation with an on-site milling, facility, at Contact Lake. So, it has been done before. There's been a large project that's been built on site, and the lake clearly was there in the 80s and the 90s as it stands today. It is our understanding that you have to be mindful about the materials that you're using in any exploration work. You have to be mindful of the shoreline. For example, you cannot drill within 30 meters of the shoreline, either in the summer or fall or even the winter. So you have to be very mindful of that, which we have been and we will continue to do. The lake is more of an obstacle than an impediment. I was told by one of our board members, I don't know if you know this, but Ross McElroy, who was responsible for the building and the sale of fission uranium.
Yep.
During the early days of fission, they were also exploring on a lake. This is Saskatchewan as well. Fission was in the basin, and he was able to drill from a barge in the summertime. And he said that the costs for drilling on a lake were, not that much more than, drilling from ice in the winter. So that was a really interesting data point for me, and clearly it tells you why we have such a great person like Ross on our board. But like I said, this is like you said, this is Saskatchewan. Lakes are prevalent everywhere. Cameco builds massive uranium mines, McArthur Lake and Cigar Lake in particular, in a swamp under a lake. They freeze their ore bodies. These are just obstacles. And I think with modern mining methodologies and technologies and new exploration methods, these are just the things you have to work with.
Yeah, I've not yet been to Saskatchewan actually myself, but I have interviewed a lot of uranium companies, including Ross, many times while he was still at Fission. So I do get a rough lay of the land there. What else am I forgetting to ask you here, John? I think we've been through most of the basics here. Again, definitely I've written down a lot of things for follow-up conversation here, so hopefully we can do that. But what did you come here hoping to talk about that I failed to bring up?
I hope that your audience and yourself understand the value proposition here at Trident. A brand new story. There's no institutional street research coverage just yet. I think that's going to change. We're trading at a sub $30 per ounce in the ground valuation. I think we're discounted because the story isn't very well known in the marketplace just yet. We're looking to change that. And also, I think that the market discounts us because, there's 2 million ounces on our book across 4 deposits. I don't think the market is really paying attention to that. Those 4 deposits are, within very close proximity to one another. They're very good grades. They're open pittable, and can be part of really one mining complex in the future. It just requires scale. So I think that what we've really forgotten to hammer home here is, at $25 per ounce in the ground at a $2.10 stock price, with a former past producing high grade underground mine plus 2 million ounces. I mean, this company has the potential to be, much, much larger. If you were to give it a comparable valuation or even an average valuation, and you were to give some type of credit to Contact Lake, if you were to give some credit to Knife Lake, like you're looking at a company that has a $200 million market cap and not a $65 million market cap. And so, I want to underscore just how, undervalued this particular asset is, and with a very strong balance sheet to go and execute the growth plan for the next 6 to 12 months.
Yeah. I can appreciate a good forward-looking statement when I hear one, but that's what we always talk about. And no, that it has been a good overview. I'm sure I'm missing a lot of questions there. So for people watching and listening, let me know what I'm missing, and I'll ask it next time I'm talking to John. John, what's been the most fair criticism of ROCK that you've heard so far since you've been running the company?
Yeah, I mean, since we did the merger, there's been very few unhappy shareholders. That merger was done at a post consolidation 35-cent stock price. We've traded as high as $2.50. We've done what we set out to do at the beginning of the year. We've executed the plan. We've done it in a very responsible manner. We've kept our capital structure very tight. Most junior gold companies have issued new shares over the last 6 to 12 months. We really haven't issued that many new shares. We've been funding our growth on our balance sheet, and like I said, we're just going to continue to do what we said we're going to do. There's been very little, criticism of the company. What I could tell you, and we're trying to change that, and this goes back to your comment on marketing and marketing expense, is for the first 6 to 8 months of the year, we did very little marketing. So one of the big gripes of the company was like, guys, why aren't you getting out there? Why aren't you telling your story? Well, the story wasn't, pregnant enough to go out and tell. And now it is. And so we've turned on the marketing programs. I've been out on the road, and we're starting to change that. So we're listening to our investors, and we're trying to react.
How far along are we? Is it this like a 7-month pregnancy, or what are we talking about?
Yeah. Well, you know what? I like to talk about baseball games versus pregnancies. So, let's use the 9 innings of a baseball game. I think we're in the very early stages of the game. Like we're in inning 1 or 2 here. We're just getting started. There's a lot of game left to play.
Yeah. Well, as a European, that's obviously way over my head, but I'll just take your word for it for now. And then maybe next time we'll do a baseball pod. Instead of talking about steaks, we'll talk ball. John, that's it. What is your most fair criticism of me? What do you wish I would have done differently? I like that you like medium rare steak. That's not really a criticism. It's more of a compliment. I think you did a great job. A lot of the interviews that I have there are so cookie cutter. This one was you were very well prepared. So, I'm not going to criticize you. I'm going to compliment you. I was going to say, I wish my wife criticizes me the same way. I'd appreciate it.
Yeah. So well done. Thank you. And hopefully I can come back and we can talk a little bit more.
Appreciate your time, John. Thank you so much for doing this.
My pleasure.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."